crypto assets seems to have been the theme of the day in all kinds of different panels, plus over the last few days. And so those who followed us in the past know that some of these panelists are not new to engaging with us on the subject of crypto assets, but we really would like to focus on the international dimension. And to do so, we've got a really extremely distinguished panel, quite a big one too. So we'll see how we manage, bear with us. Maybe starting us off on the international dimension, I would like to first pass the floor to Eva, because I'd like to hear a little bit what you've been doing at the level of the FSB, because my feeling is if the FSB could sort out the regulatory framework for crypto assets, it might make life easier and we might not need this panel altogether. So it'd be good to hear what you've been doing so far.
Thank you, Nicholas. It's lovely to be here and to see you again. I mean, even if it is just in 2 dimensions. Well, you remember it's less 2 years ago, in June 2019. It seems like a long time ago, a different world back then. Facebook announced that it was planning to launch a stablecoin in early 2020. And regulators around the world became very concerned given the global reach of the Facebook group and the potential impact on financial stability, investor protection and market integrity, money laundering. So the G7 established a working group on stablecoin. Then the G20 mandated the Financial Stability Board to examine the regulatory issues raised by so-called stablecoins. So the term is a marketing term, but it's stuck, stablecoin. The FSB then carried out a survey of existing regulatory and supervisory approaches across FSB jurisdiction as well as non-FSB jurisdiction, issued then a consultative report in April last year, and finalized the report ahead of the G20 summit in October 2020. And the report set out 10 recommendations, high-level recommendations, like the 10 commandments, calling for comprehensive regulation and supervision that addresses the potential financial stability and other risks while supporting responsible innovation. And regulatory and supervisory approaches should be based on the principle, same business, same risk, same rules. The approach should be functional, that is based on the economic purpose, not the form. And given the pace of innovation, regulation and supervision needs to be technology agnostic, so not specific to a particular technology. So what this means is basically if a stablecoin is used as a means of payment, it should be subject to the same stringent regulation as other payment instruments. Now we need to implement the recommendations. And we're seeing regulatory reforms across many jurisdictions. Jurisdictions pursue different paths, which are determined by the historical structures and existing regulatory taxonomies in relevant jurisdictions. For example, in some, it's possible to fit the crypto asset into existing categories of financial instruments. In others, it may be more difficult to do so because the categories are more narrowly and strictly defined. Well, all roads lead to Rome, but there may be differences between national jurisdictions and the particular road that is actually chosen. So whether or not these differences cause any practical issues or friction remains to be seen, and that is certainly the focus of the FSB's work going forward. So for this year, the Italian G20 presidency asked the FSB in collaboration with other standard setters to assess any remaining challenges to the implementation of the FSB recommendation, in particular financial stability concerns and possible effects on emerging market and developing economies. And to conclude, let me also highlight that the regulation and supervision of stablecoins is an important building block of the broader G20 FSB roadmap on cross-border payments.
Very much. And actually, we talked about that in earlier sessions, Eva, when we looked more specifically at payments. Maybe I'd stay at the international level and then bring in our European speakers. And Jean-Paul, I bring you in your role as Vice Chair of IOSCO and obviously as Chair of the Innovation Working Group within IOSCO. How are you looking at this? Because again, a stable coin or crypto asset can have payment functions, but of course can also be a security or used in securities markets.
Well, thank you, Jonas, for giving me the floor. I think that you will be very happy with my first statement, with my first answer. I think that the right level in order to tackle all the issue, it's not at domestic level, it's at international level, at EU level, at a worldwide level, because we are speaking about, I would say, a typical cross-border, I would say, business, especially the last month. And therefore, I would say we need an appropriate answer, which is, I think, a real challenge and a tricky issue for people like me, but also for Anne and other, and also for the European Commission. So I speak not only about supervisor, but also about regulator, of course, for a member of the European Parliament and the FSB as well. Because it means that at the same time, we need to be there in order to foster financial innovation. But at the same time, and that's my personal point of view, it's what I'm used to call our DNA in Belgium, but also as representative of the FSMA at international level. The starting point for us is also linked with retail consumer protection, which is absolutely important for us. It seems to be quite clear and obvious, but when we are speaking about crypto asset, which can be considered as I would say, a market which is evolving every day, the balance is a very challenging issue. Because of course, I would say at the beginning, you would expect from people like us that we foster financial innovation, and that's what we are doing. But after some time and very rapidly, and even from the start, there will be very important issue about consumer protection. So that's an interesting balance. It's part of our day-to-day job, generally speaking, of course. It's not only limited to this aspect, but this is a very, very important issue. And therefore, I think that the place to be is to have, I would say, an answer at the most appropriate level. And it means for that, I would say, worldwide level. And as a member of ESMA, of course, also at European level. And I don't see, frankly speaking, any kind of competition, overlapping, pushback between the different agents. If you have a look on, I would say, initiative like MiCA, you can see many common aspects, I would say, with what we are doing at worldwide level, at the level of IOSCO. If I may just a little bit in 2 minutes about what we are doing at IOSCO level. First of all, I would say it's eye on the agenda. Of course, I presume that other panelists would say, but it's quite obvious. This was not the case. I can tell you, I have the pleasure to be around the table for some years, and I have also the pleasure to be for some years, or say, one of the IOSCO vice chairs. This was not the case. Financial innovation at IOSCO level, at ESMA level, at all level. It was not the case 10 years ago. It was not the case 4 years ago. And then in 2 or 3 years, it's a change a lot. And what I can tell you, and to the participant to your panel, Nicolas, is that it's high on the agenda. And even, I would say, we start every meeting with some aspect about financial innovation. And if we have a look on crypto asset, I think that I may say, from an objective point of view, that it's that crypto assets are of interest to IOSCO and its member, because it's also important to say IOSCO, it means worldwide organization, 95% of financial markets, with different kind of maturity, different kinds of experience. We are not delivering binding issue, consensus-based, okay, it can take some time. It's like United Nations of at European level, but the day that you have consensus, you have a pressure at national level to ensure an appropriate level of implementation. So that's the place, one of the places to be for that. And crypto assets have been the subject of many discussions at the level of the board for, I would say, for more than 3 years. So it means that in the meantime, and in our very close collaboration, and I don't have to tell that to Eva, of course, in close collaboration with the FSB, for instance, we have rolled out a coordinated program of initiative across different sectors under our so-called public work plan, which is also something new. It was not part of the tradition before. It was part of the history of the FSB to come with work plan. It was not yet the case at IOSCO level until 3 or 4 years ago. And then we decide to give more priority to this aspect, and especially in the work plan, to address the issue and the risk. But I think that I may really speaking about a comprehensive work. Because first of all, we have been able to publish, I would say 1 year ago, a paper examining a paper about risk and regulatory consideration to crypto asset trading platform, which was not an easy task, because the objective is first of all to understand to which extent we as securities regulator in charge of rule of conduct, we can consider that it could be part of our mission statement. It depends, of course, of the national framework. So it's not all necessary, as we know, the same legal approach. And if it's the case, how do we deal? And that's the reason why, if you have a look on this paper, I think a very interesting paper, which was published in February of last year, we are working with Toolkit. The objective is to propose or support, I would say, a dedicated support to our members, and to consider, to give them the opportunity to challenge the issue themselves. Do you consider that is part of your mission statement? If yes, maybe it could be useful to use our toolkit. And our toolkit, it's about access and onboarding. Safekeeping, it's obvious, but if you have a look of what we have been forced to read the last days, in some newspaper, it's still an issue, safekeeping of participant assets, identification and management of conflict of interest, that's very important, and that it has to be disclosed if it exists, transparency of operation, market integrity, price discovery mechanism, a very important issue, and technology. That was our first paper published, I would say, in February. The second one, the second work stream is what we call a regulatory risk review of fund exposure to crypto assets. The third one is, and that was the last one, which was published in December of this year. And that's the reason why I think that it's a comprehensive approach. And it's about financial investor education on crypto assets. It's not about how to encourage fund foundation. It's not only about how to ensure an appropriate level of consumer protection. It's also how to support, I would say, financial education, especially when we know that crypto asset means to have a direct dialogue between a non-sophisticated investor and a very sophisticated developer. And that's the tricky issue that we need to address. And it's part of a paper published last year. And last, but, and of course, we published a report on the so-called stablecoin initiative, but due to the fact that there is also a work stream at the level of the FSP, I don't intend to elaborate on this. But last but not least, one of the very interesting initiatives that we were able to take at the level of IOSCO, it's the so-called ICO support framework. So what does it mean? It's an internal online resource directed at members, IOSCO members, to assist them in dealing with the regulatory risk arising tokens issued via ICO, include many issues. We are a membership organization, so it's part, I would say, of our mission statement. And the objective of this, I would say, ICO support framework is to support members in considering the domestic and cross-border issue relating what we call the life cycle approach, issuance, trading, any exposure of funds, and so on. So, and from this point of view, it's also important to see that I think personally, but up to the representative of the European Commission and ESDA to see if they agree with me, I think that there are some similarities to feature within the MiCA program of the EU and what we are doing at the level. We also examined the broad nomenclature of tokens, utility, security, payment, which can be named differently, but broadly mapped onto other, I would say, European equivalent. The most important from this point of view, Nicolas, is that we need, by definition, to think about the economic system, for instance, of ICO, what we call the look-through basis. That's, I think, the best starting point for the job that we have to perform as a securities market link. So you see, it's a very comprehensive effort. It's a day-to-day, and of course, it's systematically updated and upgraded, because what we are discussing about, it's nothing more to do with, I presume, the first annual conference that Afore Consulting used to organize some years ago. So there are, of course, some principles which are still the same, and the objective is to catch the issue to see to which extent IOSCO principle can be implemented. But of course, we have to upgrade, I would say, day-to-day, on a day-to-day basis, what we are dealing with.
You are absolutely right, and that's one of the reasons why we have this conference every year, because the subject matter has evolved a lot, though the underlying products and service providers and customers don't. So it's an interesting development. Maybe finishing off this kind of first international kind of introduction, I might pass over to you, Sharon, because you're also very involved from the US side in these, well, in particular in the FSB working group, but also you've been involved in the G7 and G20 work. So I'd like to get your views from that perspective on the international work streams.
Great. Thanks, Nick, and thanks to you and Afore Consulting for hosting this panel and having me participate with my colleagues today. So on the international front, as you mentioned, and as Eva has highlighted, Treasury has been very involved in the Financial Stability Board work streams, both the regulatory issues of stablecoins, which issued 10 high-level recommendations, as well as contributing on a going forward basis to the cross-border payments working group. We also chaired a digital payments experts group in our G7 presidency in 2020, and are very happy to learn that our UK colleagues will be taking that forward in their UK presidency this year. So our interest and efforts and leadership in this area are precisely to lend weight to your point, Nick, and as other panelists have mentioned, of the importance of cross-border cooperation, since a lot of these crypto asset instruments are sort of inherently international and inherently have cross-border regulatory and supervisory considerations. And so in order to ensure a level playing field and continue to promote innovation and open markets, we think this international cooperation remains critical. Maybe I can just provide a brief overview of the way the US is approaching crypto assets and highlight a little bit a recent President's Working Group statement that we issued in December on stablecoins. So I think consistent with what others have said, we really do try to take a functions-based approach to regulation in the United States. And again, we think this helps level the playing field and treat new technologies and new business models similarly. We take on board the same business, same risk, same regulation principle that the Financial Stability Board and the G7 have endorsed in this functions-based approach. So, what that translates to is, if a crypto asset exhibits the functionality of a security, it'll be regulated as such, or a commodity. If it provides banking services, then it will then of course be subject to bank regulation. So I think that's very consistent with the international approach that we've all been coalescing around. Just briefly on the President's Working Group statement that was issued in December. So this statement, just to clarify the scope, was more narrowly towards a certain type of stablecoin that raised to a level of significant scale. How to use US Nexus was tied to a single fiat currency and primarily used for retail payments. So a sort of a small, narrowly scoped type of crypto assets, I suppose. And the statement was only an initial assessment by the President's Working Group on Financial Markets. And I would just note that additional regulatory or supervisory requirements would need to be implemented through our regulators as warranted. And my colleague from SEC is on this panel, so she can keep me honest there. But just to highlight some of the issues that we noted, for certain of these types of stable coins that reach a significant scale, we felt that additional safeguards would be warranted, including consideration of providing enforceable direct claims by holders to exchange their stable coin for the underlying asset. And second, the capability to obtain and verify the identity of all transacting parties. And of course, strong reserve management practices, including ensuring a one-to-one reserve ratio and adequate financial resources, would be very helpful, and we would continue to look for robust operational reliability components, including with respect to cybersecurity. Specifically to our thing about cross-border cooperation, we would also note that I think two things would be important. Again, given the almost inherently cross-border nature of most of these instruments, one, the ability for regulators in any jurisdiction that the instrument operates in to have sufficient access to data in order to sufficiently regulate and supervise, and also that there will likely need to be some sort of more innovative cooperation mechanism amongst the authorities in the relevant jurisdictions, either in terms of information sharing or some sort of cooperation for effective compliance and supervision and deregulation. So again, those are some high-level thoughts from the U.S. side. I think very consistent with what my colleagues have already outlined. One additional point that I would just note from the G7 presidency, we also issued a statement on that front, and it was not specific to regulatory or supervisory issues. In that group, in order to kind of be additive to a lot of the work streams that were already going among other standard setting bodies, we focused, I think, on some of the discussion on the public sector versus private sector roles of money, and thinking through what the relative advantages and considerations could be. And our statement highlighted, I think, key principles that the G7 shares in this conversation, including the importance of transparency, the rule of law, and sound economic governance. So I think these are characteristics that we would all share are important in terms of underpinning the current international monetary system. Let me just stop there. Thanks, Nick.
Thanks very much, Sharon. I think you've raised a number of points that I do want to come back to as part of the follow-up discussions. I like your comment about innovative cooperation and information sharing, but also, Peter, we come to that in a moment, direct claims and how you actually exert your claims against the crypto asset. Maybe, Stasys, I pass over to you. I normally would always start with you, but I thought I'd kind of bring in the international perspective first and see how does that chime, how does that match with your thinking from the European side and being confronted with preparing a piece of legislation on crypto assets in Europe.
Thank you, Nicholas. Thank you for inviting me once more to this discussion. And I commend you and your four colleagues on organizing this conference and your perseverance in managing all these panels, because I just envy your capacity to integrate and discuss all that. And of course, I have a pragmatic interest in participating, and I followed most of the discussions because I'm trying to integrate that into the work of the FinTech Working Group at the European Parliament. So let me try to dig a little deeper, because I think if we go to the international levels and talk about the regulation and supervision and the disparities and fragmentation in taxonomies, both crypto asset taxonomy and also regulatory taxonomy, which is very well described in one of the papers of FSB. Let me quote from one of the books I've been reading recently, and that's by Robert Shiller, winner of Nobel Prize. And the book is called Narrative Economics, but subtitle is quite indicative, I think, it's in this context as well. How stories go viral and drive major economic events. So we're talking about the financial innovation. That's a narrative, a story, which is sort of driving and framing our discussion to a certain extent, even though in the previous panel, the term of detrimental innovation was used, and I like that, because innovation is a multidimensional thing. We cannot look at only positive things. So let me read a couple sentences only. Bitcoin was built as a reaction against corrupt governments and financial institutions. Bitcoin was meant to function as a monetary weapon, as a cryptocurrency poised to undermine authority. And that's, Robert Shiller quotes from someone else, Sterling Lujan, part of the Bitcoin, discussion on Bitcoin or whatever. So, this opens a discussion in the other dimension. And since Robert Shiller is a world expert and received Nobel Prize for, researching the financial bubbles, I think he himself and others, including the Bank for International Settlements general manager, and also Nouriel Roubini, who I respect very much too, they call the Bitcoin, for example, bubble, and some of them call it a Ponzi scheme. Maybe that's too extreme to a certain extent, but there are characteristics of that. So the question then, an international question, is how do we approach and regulate something which is a potentially, not necessarily, but potentially monetary weapon, and financial bubble, and then Ponzi scheme. So that could be a provocative question in itself, but I think we need to look at the fundamentals of the crypto assets, what they are. Are they, currencies? Obviously not. We discarded of that term. Are they assets? That's a big question for me too. Maybe they are crypto tokens. That would be maybe a new term, but more accurate. So in addition to that, I don't want to complicate the discussion, but the fundamentals and fundamental problems in the financial system still remaining, be it maturity mismatches, be it the size, complexity. You mentioned yourself in one of the discussions, the blurring the lines, borders, be it sectorial borders, be it product borders. And now with the crypto and the technologies, DLT, the national jurisdictional borders are also being blurred, or somehow we have to look at that. So this, landscape of the financial system, especially after the crisis and after COVID, there'll be major problems. So how the crypto assets fit into the financial system? Do they, bring benefits, stability-wise, functionality-wise, be it payments, be it, saving instruments or whatever, or do they risk to destabilize and contaminate to a certain extent the financial system? The other fundamental, area I'd like to touch briefly is the supervisory, not necessarily regulatory, but supervisory and oversight levels. This is very complex. In the European Union, we have 4 supervisory models, so architecture is quite fragmented. And in this fragmented architecture of supervision, arbitrage opportunities, even the supervisory competition cases, I witnessed them myself in my home country, are an issue. So how do we deal with that? It's a big question. So I think there are a number of things, fundamental level, that we have to approach and be as straightforward as possible in describing what we're dealing with. And to end, I think the benefits, potential benefits of the crypto assets, at least majority of them, are probably outweighed by the risks and the costs, both for the financial system and for the consumers long term.
Thank you very much indeed, Stasys. Before I pass on further, just remind everybody that we've got the Q&A function, and it's already becoming quite lively, and I'll see what I can kind of bring in as we go through the conversation. Certainly the ones that have come in so far, I will kind of integrate. I don't want to go into a detailed discussion on the taxonomy around or designation of crypto assets. We had separate panels on that, and I know this could take hours. And Peter Kerstens came out of a council working group where it took hours, and I'm not sure whether they've reached any conclusions. But before I come to you, Peter, maybe pass over to Val, because what I am interested in is the international dimension. And I think what would be interesting for me is, when is a crypto asset or stable coin systemically relevant or significant or sizable enough that we have to look at it at the international level? I know the EU is working on certain thresholds and so on, but how, from an SEC perspective, are you looking at how you define or see as relevant particular stable coins or crypto assets, and when do you think do they become internationally relevant?
Sure, thank you. And a quick disclaimer that my views represent my own views and not necessarily those of the commission or any commissioner. And the other disclaimer is I'm sorry for the construction noise in the background. It's unexpected and it's not something I can control. So hopefully you can hear me. We approach things, again, tech neutral, principles based, and the same activities, same risks, same rules. That said, many of the arrangements that we're seeing are cross-sectoral. They may take on characteristics of various products or systems or offerings that we're familiar with. The challenge is, of course, embracing the innovation that's happening around these offerings and systems that meet, embracing it on the one hand, but also making sure it meets regulatory and policy goals and not sacrificing investor and market protection from the SEC point of view. So just an overview of our approach. Of course, the threshold question for us is going to be, is the digital asset a security or otherwise being used in connection with securities related activity? We don't care that someone calls it a stable coin or a utility coin or whatever they're going to call it. We're going to look behind the label. So security is defined under our federal statutes and includes things like stocks and bonds, but also investment contracts. And our definition of a security is broad and it's flexible and it's intended to encompass all manner of things designed to seek to use the money of others on the promise of profits. So we disregard form for substance. We emphasize the economic reality underlying a transaction and not the name given to the transaction or the form of the organization or the technology used. If something's a security, of course, the securities law framework applies. So we're going to apply our laws to all offers and sales of securities. They either have to be registered or qualify for an exemption. Market participants may be engaging in activities around the offer and sale and trading of the securities. And so those market participants and the transactions may need to be registered. And then even if no registration is required, the activities could still be subject to the Commission's regulation and oversight, most notably in the anti-fraud space. So this means that digital asset activities have touched on every part of the Commission's activities and mission. These things are global in nature. So you mentioned the systemic importance. Yes, I think we're monitoring that from a market integrity and stability perspective. But if the activity, regardless of where it's based, if the activity is touching US investors or made an offer into the US, or it's somehow there is some nexus to the US, then we're going to likely assert jurisdiction, especially if it's affecting US investors and markets. And so, that's kind of broadly how we look at things. I think I'd like to use this opportunity to talk about the key developments that we've had recently in the digital asset space. And I think these illustrate that innovation is happening in the securities markets, and it's happening and can happen in a compliant way. So just in the recent past, and I'm talking about over the past year or so, our Division of Corporation Finance qualified 2 offering circulars that were related to initial coin offerings that were conducted under our Regulation A exemption from registration. We had a token offering that became the first pursuant to a full-on registration statement under our 1933 Act for a digital asset offering that was declared effective by the staff. The staff can, under appropriate circumstances, issue what we call no action letters. And in these cases, a project typically comes to us with a proposed way of conduct. And if appropriate, the staff can issue a letter essentially stating, if you follow this course of conduct, we will not recommend any enforcement action against you. So this doesn't bind the Commission, but it is a very strong comfort letter to get. And there've been a number of these in the digital asset space. Our Division of Corporation Finance, for example, issued 3 of these letters to digital asset issuers that wanted to go ahead and offer digital assets without registration under the 33 or 34 Act. So 3 of those letters went out for projects. Our Division of Trading and Markets issued a no action letter to a participant who wanted to use distributed ledger technology to record changes in ownership of certain equity securities with certain participants in a time-limited fashion. So in a sense, creating a pilot program to measure the effects of using distributed ledger technology in the back, kind of the back office functions. And so, you know, that innovation is happening now. Trading and Markets also issued a no action letter to our self-regulatory organization, FINRA, clarifying the way that an alternative trading system or ATS can facilitate transactions in digital asset securities. And then in the investment management space, there have been 2 funds that have registered under our 40 Act. So they've become registered investment companies. One of them is a closed-end interval Bitcoin strategy fund that invests primarily in Bitcoin futures trading on the CME exchange in the US. And the second is a closed-end interval fund that makes traditional investments in primarily in Treasury securities, but it issues its shares in a digital format on the Ethereum blockchain. And then most recently, in December of 2020, the SEC issued a statement that really has 3 functions. First, it's a statement that sets forth specific circumstances under which a broker-dealer can do all the broker-dealer functions with respect to digital asset securities in a special purpose broker-dealer. Second, it's essentially a no action level, a commission level no action letter. So the commission is saying that if a broker-dealer operates pursuant to these specified conditions, it will not be subject to an enforcement action under one provision of the customer protection rules of the SEC. It does clarify that these broker-dealers will be subject to full examination by FINRA and the SEC, and the statement is a no action position for a period of 5 years. And then third, the statement requests public comment on the commission statement and no action position, and requests comment whether or not, you know, this should be expanded or contracted in any way, whether we got it right, and ask specific questions. So the commission and its staff will continue to be analyzing, you know, things like custody that present challenges in the regulatory space. So let me pause there. I think that gives a good overview of some of the innovation that we've seen in the securities industry around DLT and blockchain.
Thank you very much indeed, Val. It does. And I applaud you to having the ability to issue comfort letters. We've been urging to get that power at the European level. I know there are issues around it, but it's certainly a tool that we envy you for. I think, if I may, just a very small follow-up question based on also something that's come in and something Stasys said. In defining a security, I'm not a lawyer in that respect, but you would normally assume that the security has some form of an underlying value or is a security of an underlying asset. Now, if it's an asset-backed crypto asset, or if it's a DLT tool that's used for underlying securities, I fully understand that. But there are crypto assets which have effectively no underlying asset. So how do you treat those? Because Stasys was very polite, but he effectively called them digital tulips, looking back at the tulip speculation of the 17th century or 16th. So how do you deal with that? What's the demarcation? And secondly, when it comes, and that's the question, when it comes to decentralized finance, because there's this blurring of a line between crypto assets in the way that we're talking about them now, handled through financial institutions, and decentralized finance. How would that fit into your approach?
That's a great question, because many of these assets we hear are not based on fundamentals of a company that we're used to assessing the worth of an enterprise. And I think that's what the Howey test is meant to test. It's essentially, is there investment into a common enterprise with a reasonable expectation by the investor that they will profit based on the efforts of others. And these efforts are the managerial and entrepreneurial efforts of others. So really they're investing in the project, the enterprise, the people behind it. And so that is what backs those assets. That's what makes them a security under the US Howey test. So, where we have systems where there is no central acting party, there is no one making those Howey type promises that they will increase the value of the project, either through the payment of dividends or through just the accretion of value based on, building out an ecosystem. Where we have no central acting party making those promises, then that is more likely to be not a security.
Thank you, Val. I think, Peter, over to you. I think you're facing similar questions on a daily basis, literally today. I was feeling for you. As to how do you see this question about, when is a crypto asset systemic or let's say globally relevant, so that we kind of come back to the global dimension, number one, because you've got some, at the moment, fairly clear, crude, quantifiable thresholds. And I think secondly, also this question of DeFi, decentralized finance, and how that fits into any taxonomy you're developing.
Well, whether or not a crypto asset is systemically important and when is it systemically important matters if you're looking at the debate from a financial stability point of view. Then, or generally, or maybe from a market dominance point of view, then you say, well, it's important to know whether this crypto asset is systemically important and what are the consequences of that systemic importance and should we regulate that for that or not. But if you look, for example, at purely investor protection or market integrity, whether the crypto asset is systemically important doesn't really matter that much because consumers can lose their money and their investment also on relatively small crypto assets. So the entire debate about significant or significantly important crypto assets has to do more or really emerged after the announcement of large stablecoin initiatives by large tech companies, which shall remain nameless, but everyone knows who I am talking about. Because before that, we in the EU, but also in the international community, never really were confronted with debates about systemic importance of crypto assets, because while it's a very innovative and dynamic market and it's very fascinating and there's very interesting projects and very snake oily like projects, all flavors of ice cream are available in the crypto world, none of it seemed to be as systemically important, and the Financial Stability Board's repeated monitoring reports on the crypto assets markets continue to conclude that for the time being, and despite the fact that crypto assets have now a market capitalization over $1 trillion, that is still not a significantly relevant amount for this asset class to create financial stability problems. But it definitely can create a lot of financial integrity problems and market integrity problems. And we also need to regulate for that. We try to, because crypto assets are borderless, both from a geographical point of view, but also from a legal point of view. They don't really fit very neatly into legal categories. We have policymakers and regulators around the world scratching their heads about what to do with these things. And we thought that given that we're all scratching our heads, maybe we can scratch our heads together in Basel or in wherever the international regulators end up meeting. And now we're meeting virtually, so we can scratch our heads behind our computer screen at home. And we need to come to see how do we address this and what is our policy on this. Ideally, in the world of international policy coordination, you start with a blank sheet of paper and you come to a collective view and a consensus, and then everyone implements that consensus. That's how it ideally goes, but the ideal world doesn't exist, so that's how it never goes. We never start with a blank sheet of paper. What you have is discussions, and then you have a number of jurisdictions that have legal frameworks that are usable to an extent, to a lesser or further extent, who will use this, and these frameworks will inspire others. Or you've got jurisdictions that say, well, look, we needed to do something about this market, and we've developed a regulatory framework for it, or a policy framework for it, and you push this forward, and that then starts inspiring other jurisdictions. And in the world of international policy coordination and regulation, there's no such thing as copyright. Plagiarism is the best way of regulatory convergence. We basically copy rules and ideas from each other. We try to copy the good ideas, and the not so good ideas we try to leave aside. And occasionally we're successful in that. Occasionally we copy also the not so good ideas. But you see a lot of, I'd say, in the coordination beauty contests taking place with people parading their ideas and solutions, and other jurisdictions picking them up. And that's how you gradually get to convergence. A very big problem which we currently have, and you mentioned that, is this decentralized finance. And now to me, decentralized finance means non-intermediate finance. So basically fully based on protocols with no intermediaries. It exists. It's not widespread, but it does exist. And it's a real challenge, not only for us in Europe, but for everyone around the world, because I do not know of any jurisdiction that does not apply its legislation, its financial rules to intermediaries. The entire legal framework, regulatory framework, supervisory framework is geared towards the intermediaries, the natural and mostly legal persons that provide services, that carry out activities. And if they carry out activities that are regulated, they must comply with the rules. In decentralized finance, in truly decentralized finance, you have no person carrying out an activity. You have no intermediary. And so the rules cannot be applied to them. If this grows further, sooner or later, we're going to have a very creative set of policymakers in one jurisdiction or the other who are going to come up with a way to also capture that decentralized finance, if it does indeed present problems that need sorting out, either from a financial stability point of view or from a market integrity point of view. But maybe, I don't know, maybe it stays too small to care, in which case I do not think that rules that are applicable to decentralized finance will be forthcoming anytime soon. Thank you.
Thank you very much indeed. And with that, I would like to drill down a little bit more on the nature of international cooperation or cooperation, and maybe come to you, Anne, with two questions. I think one is, Stasys made that point that there are, even looking in Europe, different supervisory approaches, different supervisors, and the concern about gaps potentially emerging. An issue that might arise in Europe or not, but becomes much more poignant once we move to the international level. And secondly, what has become very clear is a dichotomy in the approach to crypto assets as to whether they are securities, including in Europe, because then they would be designated under MiFID according to the proposal, or other crypto assets used for financial services purposes. And I find it interesting because a lot of the international supervisory cooperation or international cooperation will, I guess, depend on whether there's a common view of whether we're dealing with securities, crypto assets which are securities, where you've got established IOSCO frameworks and other frameworks, and any other type of crypto assets where you still might have a responsibility as ESMA, but which are not necessarily deemed as traditional securities under MiFID. I don't know whether that kind of kicks you off a little bit as to how you think that cooperation should look like and could look like.
Yes, thanks, Nicola. These are all good questions. I think the first comment that I'd like to make, and just to echo what others have said already, I think international cooperation is really obvious and it's needed, it's paramount in the space because of the global nature of those initiatives and also the scale that they can reach. And we have a number of high-level principles that apply globally already, and which are relevant to those initiatives. And I'm thinking, for instance, about the FSMA IOSCO principle on systemic payment and settlement systems. So I think we have some principle already setting some general expectations in terms of legal framework, compliance framework, risk management frameworks. But then what's obvious as well is that, I mean, those principles that we have were not designed with these new innovations. So we need to scratch our heads indeed to see how they might apply to these new animals. And then we also need to see where there might be gaps and how we want to address those gaps. And there comes the issue about the fact that we're not starting from a blank sheet of paper. And if I can reflect a bit on my own experience, when we started this work back in 2018 with Jean-Paul and other member states in Europe, we had a kind of naive approach, and we asked our supervisors in Europe, well, what do you think of these crypto assets? Do you think that, I mean, should we design a new regime from scratch? Are they likely to qualify as financial instruments? And how many of them could we capture with the rule that we have? And we were very much looking to the US as well, and the HOE test that Val mentioned, which seemed to make a lot of sense. But the framework that we have in Europe is really different. The way we define financial instrument is much narrower in scope. And we need to deal with that also, because if we don't, then we create potential for regulatory arbitrage in other areas as well. And we're very mindful of the same risk, same rules approach, and this need to be technology neutral. So we reflected on this, and we made it clear at the time, and we published an advice on the topic. We made it clear that certain crypto assets will qualify as financial instrument in Europe, but many others will not. And there are important risks that need to be addressed. And this is how the MiCA proposal was designed. And I think also what's important with these new innovations is the need to approach them in a holistic and comprehensive way as well. And this is also why we have this pilot regime where we need to apply the existing rules, but we know that the existing rule cannot apply the way they are. So we are really working within the EU on supervisory convergence with our members. And of course, we're also actively contributing to international work streams and fora on the topic.
Thanks, Anne. Can I maybe ask a follow-up question briefly, and kind of leading us into a little bit more detail, kind of some of the design elements of MiCA, because, and Peter, correct me immediately if I paraphrase this in any way incorrectly, but it distinguishes between two different types of activities. One is the issuing of stablecoins, crypto assets, whatever it is, and then the actual service providers, which provide services on top of that, whatever that might be, payment services, custodian, trading, whatever else it is. Looking at that distinction, how does that distinction between the actual, let's say, issuers, the potentially the big fintech company or tech company we shouldn't name, which might launch one of these together with a few others in an association, how should we look at that in the context of international cooperation in contrast to actual service providers, which are normally regulated entities or will be regulated entities providing services on the back of those crypto assets. How does that help in looking at international cooperation, Anne?
I think, again, when you look at MiCA and the requirement that apply to issuers and service providers, I think really the objective is to have a comprehensive framework. And it's really important when you think about consumer protection and potential financial stability issues. Again, we know that the way this works in comparison to what exists in other jurisdictions may be slightly different. Again, this has to do with the frameworks that we have, and the need also to live with the rule that we already have.
Thank you. Maybe, Eva, I could pass to you on this one as well, because I would say that that's another assumption of MiCA, that effectively service providers should be regulated entities or will become regulated entities. So they fall under already all kinds of work streams that the FSB has been developing, either payments or securities. But have you thought of that distinction between issuers and actual service providers, and what that might mean in developing either your principles or just the general international cooperation around the emergence of these new asset classes?
An important principle that is contained in the FSB recommendations is that regulation and supervision should be comprehensive. And I mean, stablecoin arrangements consist of, you have the issuers, you have service providers, you have hosted, potentially unhosted wallets. I mean, there are those that manage the reserve. So, and all these entities may have disparate ownership and control, and there may not even be a single entity that has the governance and can be held accountable for the whole. And so this is a challenge for designing effective regulation and supervision. And just to state the obvious again, and Jean-Paul has mentioned it before, there is this tension between the nature of crypto assets, which travel across cyberspace. They're by definition global, and then jurisdictional mandates of regulators, and they seek to protect financial stability, ensure healthy markets, protect consumers in their respective jurisdictions. And I mean, this is not new. It's always been present in a world where finance is global and regulation is national and jurisdiction-based. And I mean, there is a lot to learn from existing mechanisms, supervisory colleges for banks, insurers, crisis management group, cooperative arrangements for financial market infrastructures. Then we have bespoke arrangements for SWIFT and CLS, for instance, and we are taking inspiration from this all, but as said before, we have these new arrangements are fairly different, but it is sort of the interaction between these different parts of the whole that can give rise to risks that need to be managed, and they can arise in jurisdictions where they're not operated or located. So that is why we are in particular also looking at effects in emerging and developing economies. So it's important here to avoid any regulatory underlaps and gaps, make sure that all the regulatory requirements, which we hope are consistent with those set out in the FSB regulations, recommendations, can be effectively applied and enforced wherever these entities and operations are located. And a challenge is here that we do not yet have an understanding of who does what. For example, we don't have the sort of Basel Concordat for stablecoin that defines home and host or the responsibilities and of individual authorities, or we don't have a deference regime or equivalence regime. So the starting point is therefore necessarily one where authorities cooperate on the basis of their jurisdictional responsibilities. And that's clearly stated in the FSB recommendations as well, that in a first phase, we need mechanisms for cooperation and information sharing that support authorities in fulfilling their respective mandates. And we do not yet know what these cooperation arrangements will need to look like. So this is clearly an area of focus, and the FSB is providing this forum for exchange of experience on what makes for effective cooperation, coordination amongst all the relevant authorities internationally, in order to ensure that we have this holistic view and have the ability to monitor operations, not in a piecemeal fashion, entity by entity or function by function, but as a whole. And here, of course, the focus is on those global stable coins. And the FSB set out a few elements or considerations to identify those which do not yet exist. However, clearly the focus is on arrangement that potentially can give rise to cross-border to financial stability risks at an international level. So clearly, this is as we see stablecoin operations emerge, it's very important that we understand what the best approach is to regulate, oversee, monitor the activities, and information sharing accents is clearly a high critical for that.
Thank you. Can I just come back one last time to the international threshold, or whatever, the dimension as to when something might be internationally relevant and when it's, let's say, more regionally or nationally relevant or jurisdictionally relevant. You tried to deal with this in the banking space through the famous key attribute paper many years ago, where you defined kind of the systemic nature of financial activities, which then caused asset managers and insurers a bit of a headache subsequently. Would such an approach make sense in the context of defining global stable coins? Because I somehow read those key attributes finding their way into the MiCA proposal.
Well, probably you're referring to the GSIB list, which is based on so there is a methodology developed by the Basel Committee on which basis the globally systemically important banks are identified, and those identified are subject to a range of additional requirements: higher loss absorbing capacity, the famous TLAC, total loss absorbing capacity, recovery and resolution planning, crisis management groups, and so forth. But well, as you know, this approach of identifying global systemic important banks worked in the banking sector because we already have a common understanding of sort of minimum requirements for internationally active banks. We have Basel, the Basel Capital Framework. So there is a baseline there and reference, a common reference point. So here we're in, in an unknown space. It's a new world. Maybe one day we will, based on the work we are doing, come to the stage that we have well able to clearly identify those structures, creatures that are can give rise to a threat to global financial stability and therefore need to be subject to higher and commonly agreed standards as opposed to regulated on a more jurisdictional level. But I, at this stage, can't look into the future and don't know when that might happen or if it will happen.
Thank you. No, yes, you're right. The GSIB list kind of became the result of what was right at the beginning, this key attribute, higher level thing about interconnectivity and size and so on. And if one reads the MiCA proposal carefully, one finds some of that sneaking into bits of the classification. So I kind of threw that in because I share your view that it's maybe a bit too early to adopt a similar approach in this sector. Sharon, you talked about innovative cooperation. And Eva just talked also about, learning a bit from supervisory colleges. And I'm just thinking of, normally we would have had FINMA here, the Swiss regulator. For obvious reasons, they're not here this year, but they'll be certainly back next year. And they are working on a possible international college. In fact, they have convened the college of a not yet authorized issuer. So what type of innovative cooperative models would you envisage or could you think of? And without saying anything about the specific case, is this idea of college structures something that was mentioned as well, SWIFT-like, one tool that could contribute to this and to the information exchange?
Thanks, Nick. So as Eva noted, this is something that we looked at under the FSB RIS process, as well as in our President's Working Group statement. I think effective cooperation and coordination will need to happen on multiple levels. At the most basic level, it is information sharing. And in terms of regulatory colleges and the GSIB approach, I think a couple of things could be tricky. One is that, as we've discussed already, crypto assets and stablecoins, for example, have multiple different functions and may fit less easily into one type of regulatory regime. Second, there's not as much of a home host type of paradigm, I think, that you would have currently in the GSIB context. In fact, a digital asset or a stablecoin could be domiciled in one jurisdiction, but have much larger impacts in other jurisdictions. So I think those would be issues that would warrant additional consideration and might be different than considerations than existing supervisory college mechanisms, for example, that were set up for GSIBs, to your question. I think the degree of regulatory and cross-border cooperative mechanisms that would be needed and the nature of them, I think, will depend in part on what kind of policy goals we're trying to achieve. So, for example, and I think Peter alluded to this a little bit, if it's an issue like AML-CFT, we will need to address that no matter what. It doesn't really have a scalability implication. It is something that is sort of inherently cross-border and it is a public policy issue that we will, and regulatory issue we'll need to address. But if a crypto asset does not arise to a level of sufficient scale or interconnectedness, et cetera, it may not have financial stability implications. And so therefore, we may not need to kind of look at it and regulate it from that policy objective. I think another issue that we will need to consider in addition to public policy objectives is relatedly the use case. So, for example, stablecoins have gotten so much attention, I think, aside from the, what's happened with Bitcoin, because the use case presumably is some sort of widely adoptable kind of payment mechanism. And that use case, which touches on so many, monetary policy issues and potentially even monetary sovereignty issues, raises a different level of scrutiny. So I think that the type of policy goal you're trying to achieve, the type of use case that's being presented by the instrument will all kind of need to feed into what kind of regulatory and information sharing cooperative kind of arrangement we'll need on all these different types of financial innovations.
Thanks, Sharon. That makes absolute sense. I have one follow-up question, which is a question that came in, which is kind of the chameleon nature of a crypto asset. So you start off with a use case, which is one use case, but it then morphs into another use case, or you define it in a certain way, and then the smart contract is, a similar product is issued with a slightly different smart contract that thereby takes it out of that scope. So you're constantly in a back and forth as to whether it's in or not. Certain jurisdictions like Hong Kong have adopted more of a self-regulatory approach to deal with this, a more principle-based approach to avoid this chameleon effect. But how big of a threat do you see to this dimension, that something starts as a payment? I think a lot of concerns with the one big unnamed stablecoin initiative is that it might start in payments and end up in securities or lending or other activities. How do we deal with those kind of issues in the international level?
Good question. And as I think other speakers alluded to, I do think that a principle-based, risk-based, and functional approach can help address that. So if we try to collectively regulate across the function and the activity and presumably the similar risk that's proposed, it shouldn't matter as much if it becomes a security or if it's currently used as a payment and what have you, because once it embodies, if you will, that sort of functionality, then I think it would need to be regulated as such. And today we do have financial instruments that are used for multiple purposes and would fit, at least in the US, under different regulatory regimes.
Thank you. And I saw Jean-Paul raising his hand because I was coming to Jean-Paul anyway, because I want to use the last 15 minutes, 20 minutes or so on this question. Please do respond to it, Jean-Paul, but I also wanted to come to the retail implication, because Sharon said, there's so much attention around it because cryptos are used for payment purposes and touch potential monetary policy. But I think the other reason is that it's now become potentially so scalable and is becoming a retail investor protection issue. And as you said earlier, Jean-Paul, an investor education issue. So I would like to hear a little bit, respond to what was said, but also how you're looking at it from a retail exposure perspective, also domestically in Belgium.
Thanks for your question. It's a great question. I think that, if I may react to your question and other comment made before, I think that the objective is not to consider that when we have to discover, I would say, this new kind of business model, by definition, the reflex, I would say, the Pavlov reflex, we need a bespoke regime. I think Anne was so kind to recall the start of a discussion at the time that I was chair of the Financial Innovation Committee. And the reflex of many people was to say, okay, we are discovering a new world, so it means that we have to start from scratch. Second reflex was to see, okay, can we work with threshold in order to have 2 layers, one at national level and one at European level? Frankly speaking, I was not convinced by these 2 kind of reflex. And I think that I'm not in one, because correct me, Stasys, but when you comment rightly to say, what does it mean? I would say threshold only to take care of financial stability. When we are speaking about people investing all their money, they lose all the money. For them, the financial stability, it's, I would say, a personal challenge. And that's maybe something unique for that, because we are speaking about 2 kinds of people that we are not used to seeing every day. And that's the reason why I think that our toolkit as securities market, as product supervisor, but also, which is very important for me, in charge of, generally speaking, financial consumer protection, our toolkit, it's a multi-layer, I would say, matrix. It's about dialogue, it's about regulation, it's about, last but not least, enforcement and possible investigation. I would say that the last 2 parts are quite traditional. The first one is rather interesting to tackle, because the problem of the challenge we are speaking about people take initiative and they do not know who we are, even the SEC, if you understand what I mean. I would say people starting their business, they scale up. Most of the time, they are not regulated at all. So we are speaking about people who are not forced to see people like me, of other supervisors. They are not supervised by prudential supervisor. They don't have to approve their prospectus, or they think they don't have to approve. So we have, first of all, to liaise with them. Can tell you, it was an interesting experience for me, because first of all, I have to drop my time and to try to understand what's the rationale of the communication of the business. That's the reason why in Belgium, but okay, that's the case in many other jurisdictions, we launched 4 years ago a financial innovation hub with dedicated staff for that. After 4 years, my experience, rather successful. We were with also the possibility to ask to the Central Bank of Ireland to join the club, rather successful. But frankly speaking, interesting speaking, because what I can tell you, Nicolas, and the panelists, is that after 4 years, frankly speaking, I didn't notice any kind of impediment, obstacle for the development of the business because of the financial regulation. There are, of course, some cross-border issue about VAT and so, but most of the time, I would say, we cannot consider that financial regulation as such is an obstacle. Good news for that. The question then is how to regulate this business. And I think, frankly speaking, that most of the time, we don't need a bespoke regime. Of course, it's not a one-size-fits-all approach at worldwide level. We are speaking about totally different jurisdictions with different kind level and maturity of development of the framework. But frankly speaking, when we speak about regulation, are we speaking about financial instruments or not? If we consider that some token crypto assets have to be qualified from financial instruments, my answer, but it was also the case at ESMA level after the publication of some paper, but also that's the case, I think, at the level of IOSCO, because I think that most of the time, many regulatory authorities globally are considering issue relating to trading with the following starting point. Do we have a financial instrument or security? If it's the case, it's technology neutral, and most of the time it falls within the remit of the mission statement of IOSCO members, of ESMA members, and so it means that the basic principle objective of security regulation will apply. Is it something shocking? Is it too easy? Well, that's the same approach for crowdfunding platform. In Europe, I would say the supervision of financial information provided by a crowdfunding project, it's in fact part of the new prospectus regulation. There is no difference. That's it. And that's the best approach. If we are speaking about something else that I would say securities, more generally speaking, financial instruments, for instance, I would say facility, some e-money, or I would say utilities, that's another word. We need to start with building blocks, and that's what we are doing. We need to have, I would say, if necessary, a prudential toolkit. Of course, generally speaking, we need also to implement very strong AML, I would say, toolkit in order to prevent and to fight against possible case of anti. But most of the time, I strongly believe, I would say, in this kind of building approach. Do we have financial instruments? Frankly speaking, it's not a terra incognita, if I may say, like we were used to say in Latin language 2000 years ago. We have to implement rather classical principles, maybe to check some aspect, to elaborate on this, but I think that's the best starting. If we are speaking about, and MiCA is, I would say, correct me, Peter, but that the starting point is the same. MiCA is, the objective of MiCA is not to address issue relating to crypto assets which are qualified as financial instruments. That's embedded in a combination of prospectus regulation at EU level plus FSMA and MiFID II. That's it. If we are speaking about other business, and that's very important because we will have to discuss about how to liaise with people who do not know who we are, and they are not interested at all. Most of the time, very young people starting with interesting business. It depends on what case to take, and then they are absolutely not interested in having a never-ending story with the project. The objective most of the time is to sell to business or to be taken over by another company. So I would say it's a quite of momentum that we need to have in order to address issue about consumer protection, about other aspects of financial stability. And the consumer for that, most of the time, they don't have any experience with the bank. So it means many young investors, and that was the case, I would say, during the COVID-19 pandemic crisis, we observed a very high level of retail investor participation. And so the objective of young generation is to test new idea of investment. So I would say they are not necessarily investing in so-called traditional. So I think that we have new generation of providers and new generation of investors, and most of the time are not aware of what we are doing as regulators. That's maybe the most tricky issue, how to liaise with them. And that's the reason why I think that toolkit, it means dialogue, to understand the rationale, to understand how it works, lessons to be learned, to implement appropriate level of regulation, also at international, and then enforcement and investigation, because we are speaking about trust. If there are questions about some white papers, and that they are not solved, there will be collateral damage for all kinds of white papers. And that's, I think, the very important issue in this kind of supervisory tool.
Can I ask you a really, really short follow-up question, Jean-Paul? If I understand you correctly, if it's a security, if it smells like a security, behaves like a security, fine. And MiFID will be amended to define financial instruments accordingly. Yeah. For these other products that fall under MiCA, do you think they should then be under the oversight of securities regulators? Because as you say, somebody needs to vet these white papers, or at least, there could be issues there. How, even if they're not securities, but they're kind of used for investment purposes or other purposes, how do you draw the line of demarcation?
No, I think that when we are speaking about other aspects than pure, I would say, securities and issue of securities or financial instruments, we need to have a comprehensive approach. It can be an issue. For instance, in Belgium, we will manage that with the prudential supervisor, because there are aspects about supervision of the providers. What does it mean for systemic issue? What at domestic level, but I would say, of course, at international European level, what does it mean, I would say, about other aspects? I would say equity, internal requirement for the quality of the internal control, rule of conduct. So that's a comprehensive supervisory tool that we need.
Thank you. Just for the audience, I think we might just run a very little bit over, because I want to just bring the last 4 panelists in on this debate, and plead to the panelists to be as short as you can within the time frame. But Val, I would like to come to you, because you faced the same issue within the SEC around investor protection. And how have you dealt with the investor protection side of crypto assets and stable coins?
Yeah, no, a great question. And as many of you know, the products that come through on the 33 Act side, which is the registration, the typical registration you'd go through to do a public offering, we are not merit-based regulators, in the sense that we're not looking to see, is it a good is it investment or bad investment? We're disclosure-based. We want to make sure that those registration statements adequately disclose everything you need, all the material information an investor would want when they're making an investment decision, including information about the offering, the securities, the financial wherewithal of the company, and the people behind the offering. So, and other things. So we're not looking at it from that respect. There are certain, if somebody wants to come in and register under the 40 Act, which is a registered investment company, for example, like a mutual fund, there are some considerations and there are some limitations around rules and regulations around the investments themselves, in order for them to qualify to be able to register and get that status. So, we're looking at investor protection from, does the investor enter into the transaction with the eyes wide open, with all the information that they need? There is no information asymmetry that makes us think that there could be, fraud or material non-disclosure or misleading statements. So we're looking at it from that point of view. Another topic that's come up is these exchange traded funds or exchange traded products. When something comes in the door and they want to register again as a registered fund, we're looking at the things around valuation, redemption and creation, manipulation. And so there were a number of applications filed to sponsor a registered fund. And our Division of Investment Management issued a letter seeking public input on a lot of those considerations. On the other side, we've got exchange-traded products, and these are products that come in, they don't want to register, they could register the offering under our 33 Act, but these come in through proposed rule changes by a self-regulatory organization to list a new product involving digital assets. So the Commission has reviewed a number of these and so far has disapproved the proposed rule changes based on their determination that the exchanges had not met their burden under the Exchange Act and the rules to demonstrate the proposal is consistent with the requirements of the Act. And these really are to prevent fraud and manipulative acts and practices and to protect investors and the public interest. So the disapprovals of those types of products did not rest on an evaluation that, you know, any particular digital asset or blockchain technology more general has no value or no utility as an innovation or investment. No, that really turned on, did the exchange present the evidence to meet their burden that they can protect the investors and the markets in listing this new type of product. And the markets are evolving, the exchanges, the participants are evolving, and that can change. So we are, you know, in the process of reviewing new applications for such products, and we will continue to apply the standard that applies, and we'll see if new applicants are able to meet those burdens with evidence that they're developing in the market.
Thank you, Val. Maybe the same question to you, Anne, because of course ESMA is also looking at the investor protection aspects and distributional aspects of securities. What would be your observations on this?
So I think, again, you need to distinguish between the different types of crypto assets. So when they are a financial instrument, then the full set of rules that we already have apply. So the prospectus rule, the MiFID rules for what concerns the trading and post-trading activities. Again, full protection already in place. And when it comes to the other types of crypto assets, those that currently falls outside of the existing rules, then MiCA provides for, as you pointed out earlier, so for requirements for issuers of those crypto assets and also requirements for service providers in relation to these crypto assets. So the issuer will need to publish a white paper, so very much in line with what Valerie was describing. We want to make sure that the investors are aware of the risk prior to investing. And then for the providers, we want to make sure that the assets are properly safeguarded. There are minimum conduct of business rules applying. Again, the objective is to have a comprehensive framework, but also bearing in mind the need for proportionality and also the fact that some of these instruments may be further away from the traditional remit of financial regulators. So MiCA provides for different building blocks that will apply differently to different types of cryptos. And for what concerns systemically important, so large cryptos, if you wish, then there would be 18 requirements for the issuers in particular, with the capital requirements, for instance.
Thank you very much, Anne. Maybe Peter, last question, because it came up, the direct claim that was raised by I think Sharon and others. There's a debate, of course, within MiCA as to the redeemability, or whatever the word would be, the ability to redeem. It is one of the more controversial issues at the moment. And even though I'm not an expert in crypto markets, I think one of the challenges at the moment is that certain crypto assets are rising in value very quickly, but to get out of them is maybe not quite as easy as one might have thought initially. So where do you see the link between redeemability and consumer protection?
Well, redeemability is a notion that comes on the one hand, from electronic money and the fact that the electronic money which was issued has to be issued at par and has to be redeemable at par. And also, it's a question of in the area of funds, where you invest in a fund as to whether or not you have a claim on the assets in the fund, and therefore your investment is redeemable against the assets in the fund. That is the perspective that a number of people have, and that they are projecting onto this crypto asset world or crypto asset reality, in particular those crypto assets that seem to have features which are quite similar to electronic money or to collective investment funds. For electronic money, it is quite clear, because at least in the MiCA proposal, we have the category of electronic money tokens. They are electronic money, and the Commission did indeed propose that they have to be issued at par and redeemed at par. So the holders of the tokens must have a claim against the issuer, and the issuer must redeem at par. And how that's be done is set out in MiCA, whether it can be fees or not, has to be transparency on this. The debate now is as to whether crypto assets that have something else than a currency as their reference, a basket of currencies or a basket of commodities or a mixture of those, and they reference that, they reference such a basket to, or they peg their value to that basket. The question then is, should consumers be able to hold, to redeem the value of that basket? Well, that depends very much on what it is they bought and what the crypto asset promise was. If the crypto asset issuer says you are buying a basket of assets which I hold in reserve, you probably can say, well, look, then therefore I have a claim, I have a right in that basket of assets. But if the crypto asset service provider were to say that, or the crypto asset issuer were to say that, he would actually be presenting a collective investment fund, which is not covered by MiCA. So we are in this conundrum that a number of people want to apply rules and principles which are very typical from fund management into something which aren't funds. Now, what we'll have to see is whether or not, if you as an issuer sell an asset referenced token, whether you create an expectation, a belief in the mind of the buyer that is actually buying a claim, a right of redeemability. And if we can solve that in two ways. Either we force the issuer to be extremely clear about it. Do you buy a right to redeemability or not? So that's one option. Or, and that's the debate which is currently taking place in the Council and it hasn't concluded yet, as to whether we say, no, if you sell an asset reference token, you must give a claim. So that is a policy choice. So that is then forcing issuers to structure their product in a particular way, and we'll see where that goes. But my sense is that a majority of member states is of the view that there should be such a redemption.
Thanks, Peter. I think in closing us out, Stasys, I didn't start with you this time, but I still give you the privilege of closing. So just you listening to everything, and I know you feel strongly also on the investor protection issue. What's your thoughts or observations to what you've heard in the last hour and a half?
Yeah, thanks, Nick. Well, this is a recurrent problem, at least at the European level, that investor, but in one general, I would say consumer protection is not handled at all at systemic level, at the European level, and that's a problem. With these new types of instruments or whatever we call them, tokens. We discussed it while indirectly scratching our heads. What it is, how to deal with that, how to coordinate with all that. So I think until we have a good understanding of fundamentals, integrate these fundamental issues into a coordinated approach, internationally, And until I'm speaking for Europe, until we have a European supervision harmonized, I think these crypto assets, at least the majority of them, seem to be redundant. They don't bring much value, more risk and more uncertainties or more complexities. And it's not a coincidence that a number of jurisdictions, 10 or 12, just don't allow them to be part of the regulated financial system. So this is my approach. I think finance has to be simplified, it has to be transparent, and therefore it has to be understood well by those who participate and those who regulate that. So that's my personal position.
Thanks, Stasys. I knew if I put that at the beginning, we would have discussed that for an hour and a half. So it's good to end on a provocative note and give us food for thought for our next discussion. I think with that, I would like to thank the panel for a very, very interesting discussion. And I think for focusing on the international dimension, I feel very enheartened, encouraged by John Paul's comment and Eva's and others, that there is this international work stream and that there should be ideally international convergence on this. It is good to hear that. We know in other areas we could have worked with that earlier on as well, and it would have kind of maybe overcome some of the challenges we're still facing. So I think thank you very much to all of you for being with us. Hopefully see you in the conference next year.